And we turn to another big story in the takeover world. Chevron agreeing to buy Noble Energy for $5 billion in shares. It's the biggest energy transaction since the coronavirus triggered a severe slump in shale. Joining us now, Mike Wirth, Chevron Chairman and CEO. Mike, congratulations. I know it's quite a long morning for you with the time change as well, so I really appreciate you taking the time today. I listened to your conference call, and I guess the bigger question I have to start off is, why now with Noble, when you could make the argument there's a lot more shale stuff that's going to go on sale in the next 6 to 9 months?
Well, Alex, it's great to see you. And look, this is a deal that builds on Chevron's strengths. These are high-quality assets at a fair price. It's a good deal for the shareholders of both companies. And I think it shows why we're different than many others in our sector. This isn't just about the Permian Basin. Noble's got a very impressive position in the Eastern Mediterranean, position in West Africa, a nice position in Colorado. So this is a diversified company with assets that fit our portfolio well, that fit our capabilities well. And of course, their shareholders now have access to a stronger balance sheet, a stronger dividend, and they retain some upside exposure to an eventual recovery in the economy and price.
So from that perspective, it seems like the takeover was opportunistic rather than strategic, which then leads me to believe this is not the start of a Chevron buying spree in the Permian to consolidate even more acreage there. Is that the correct interpretation?
Well, I think, we're always looking, and we look at things through the lens of value. And we have to see a good portfolio fit, and so there are strategic screens that we look at for any transaction. We've got a pretty high bar for these things, and we have to believe these are assets that will compete for capital within our portfolio, that will strengthen our portfolio long term and help us improve returns. This is a deal that's accretive on earnings per share, free cash flow per share, and returns, and so it's got strong financial attributes, and these are assets that we expect to be in our portfolio for a long time to come. So it's a strategic fit, and certainly we think that the time is right for both companies to engage in this combination.
So let me ask it a different way. If you had like a little sheet of paper with some names scribbled on it, are there any more names on that sheet of paper for possible takeovers, or are you putting that in the drawer for right now?
Alex, you and I have talked before. We always have a long sheet of names that we look at, but there's also a strict set of criteria that we apply, and we've got, like I say, a high bar. We look to create synergies here. We're looking to improve returns, and look, this is aligned with our disciplined, returns-focused strategy, and so we're focused on this transaction. We think it's a very good one for the shareholders of both companies, and that's really our focus today.
Something that was also interesting with Noble in particular is, I just wonder what bigger driver was it for you? Was it the international assets, particularly the assets in Israel and the Eastern Mediterranean, or was it conventional? Where do you see, unconventional, excuse me, here in the U.S., where do you see the biggest appeal?
Well, it's all of the above. I mean, it's a really attractive asset base. And look, I think they've been so successful in the Eastern Mediterranean that it does bring with it a set of geopolitical complexities and potential risks that, for a company the size of Noble, is pretty meaningful. We have a large global diversified portfolio. We have exposure to many different basins, many different geographies, many different governments, and we've got many decades of experience in managing these risks. And so I think that's a very nice fit. Their position in the Permian is very good, but it's not the same scale as ours. So I think we bring that together, and you've got scale efficiencies and capital efficiencies that we'll see. And then their position in Colorado is an add for us. We like unconventionals. We've got unconventionals in Argentina, in Canada, and in the U.S., in Texas and New Mexico. This gives us exposure to another unconventional basin that's a high-quality resource. So the entire portfolio is a nice fit. It's not about one or the other.
So let's just take the unconventional for just a second. You mentioned on the call the DJ Basin was more advanced, more mature. Is the right way to interpret that is that when the market opens up to sell, that might be top on the list to sell?
No, I don't want to say that at all. What I was really saying is that we've got multiple unconventional positions, as I said, in the Vaca Muerta in Argentina, in the Duvernay in Canada, in the Permian, and the Eastern Colorado unconventional basin is actually further along in its development cycle, so the risks are lower than they would be in Argentina or in Canada. The geology is proven, and the performance has been strong. So it's more akin to the Permian than it is to the emerging unconventionals that we see in some of these other countries.
You did mention, talking about selling assets, that now's a really bad time to be a seller and that the right price, it's better. Do you have an idea what that price is based on this purchase being at $40? Does it have to be 50, 60 Brent?
Well, I think most transactions are not done based on the price of the day, but on a view of the future. And right now we're in a period of time where there is uncertainty about the health situation in the world, about the economic situation in the world, and people are tending to be somewhat conservative in terms of what they're willing to do in asset-type transactions in that kind of a world. I think as these uncertainties are clarified, as people have a clearer view to the future, they'll have an opinion on commodity price that begins to allow some of this transaction activity to resume. So it's less about the price of the day, and it's more about the ability to see into the future.
Let's see into the future when it comes to LNG, because we mentioned the international assets, and Noble has a position in the Aphrodite gas discovery in Cyprus. Can you give me some sense of how you view the development of that project based on the very depressed global natural gas prices that we're seeing?
Yeah, right now, both oil and gas are in abundant supply and in excess of demand, and so prices reflect that. The Aphrodite field's a nice discovered resource opportunity. There are some complexities in developing that field that need to be sorted through, and it could go into a natural gas or an LNG market. It also could go into piped gas, into a number of regional markets there, and that's all part of how a project like this ultimately is evaluated and developed, is evaluating different market alternatives, the logistics, the investments, the risks. And so we'll work with the partners on that project over time to clarify those alternatives and come up with the right answer for that field.
Do you feel like that's a good template, though, going forward? Sort of you need the international and the unconventional at the same time? Like, it can't be just one or the other. Is that what I'm going to be looking at forward for the industry for M&A?
Well, certainly for a company like ours that's a global company, we won't be just a Permian player or an unconventional player. We've got great strengths in the deep water. We've got great strengths in conventional resources onshore and offshore, in LNG, across a wide variety of asset classes. And that's important to meet different needs in different markets and to be able to develop different types of resources around the world. And so for us, I think you'll look for, we want to add quality assets and assets that we know how to develop. We've got the technology, we've got the experience and the people to develop, but a large company like ours has great capability. And so we have a broad aperture when we look at these kinds of opportunities.
And focusing on U.S. environment, I mean, from when you made your bid for Anadarko, we're in just a totally different world and a totally different U.S. political environment heading into the elections as well. Did the possibility of President Biden come into play at all in terms of now the type of assets that Noble has, whether it's on federal or non-federal land? Can you give me some insight as to how that filter went when it came to this acquisition?
Yeah, we view this through the long-term value lens, and these assets have a life cycle that will outlast any individual U.S. administration and will outlast many and multiple administrations. And so these considerations are certainly in the near term important to us as we look at how we run our business and we engage with people in Washington, D.C. on matters of policy. But our longer-term decisions are not really driven by an impending election in any particular country, but a longer view on the stability of that country, the drivers of the economy, and the quality of the resources and the opportunities for us to bring it to market and meet customers' needs in a way that's efficient and responsible. And so, the political considerations are not the first ones that we look at on a deal like this. For sure. I mean, obviously, it's going to be synergistic, too. But, with Vice President Biden's planned $2 trillion energy plan, I mean, the story out of that was that the oil industry is in real trouble if he gets elected president. And I just wonder how you think about that as you look at development plans and as you look at how to allocate your capital as production drilling starts to come back. Well, two things I would say to that, Alex. Number one, we engage with administrations from both sides of the aisle. We're apolitical. We try to engage and advocate for things that are good for the economy, that are good for jobs, that are good for the environment and that are good for the country. And so we've worked with Democratic and Republican administrations for decades to try to advocate for sound policies for the country. And that's what we will do irrespective of the outcome of the election in November. The second thing I'll say is we do have geopolitical risks in virtually every country that we operate in. And it's one of the reasons why having a large, diversified global portfolio is important, is as you go through periods of time where there are political challenges in any particular part of the world, those tend not to all pile up at the same time everywhere. And so we manage these well. We manage these through good local relations and delivering on what we commit to deliver. But we also manage risk by having a balanced, broad, and diversified portfolio so that no one particular region is so critical to our future that a near-term political challenge begins to threaten the broader enterprise.
Hence that whole international picture with this merger. Last question for you, and this is just a technical point. Noble had one rig going as of May, and you have oil prices around 40. Can you just give me an idea of how quickly you might ramp up your unconventional oil production here in the U.S. based on price?
Yeah, it's a little bit early for us to really come out with any guidance on that. Alex, we had 20 rigs running last year. We're down to a number lower than that right now as well. And as we look, through our planning processes in the back half of this year into 2021 and beyond, we'll make some decisions about allocation of capital and levels of activity